How's it going, everyone? And welcome back as always to Continues to Tick. Before I get into my weekly spiel of how time matters and moves, you read the title correctly, and in this week's video, I'm going to share with you yet again another dividend investing story. A story which one subscriber had been mentioning for some time now. So here's your well-deserved shout out. Thanks, Luis. Which is the story of Mr. Earl, or Earl Crawley, a quite popular name in the world of dividend investing. Someone who was able to make not only a living on $12 an hour, which is honestly quite amazing on its own, but was also able to amass a nest egg, a financial portfolio, the size of $500,000 by the end of his career as a parking lot attendant. Now, that's pretty amazing, right? An example of a no excuse approach, certainly. But man, first can I ask, where has time gone? It's already October if you haven't really noticed. I mean, for perspective, Thanksgiving is already next month, and that's pretty insane. And maybe just depending on my location, but my days here in California are definitely feeling shorter as well. The sun is later to rise now, and sooner to fall, meaning not only are we getting closer to 2022 as we creep in deeper into fall, but our current days are feeling shorter from already being short enough. I mean, I personally never feel like I have enough time in a day already, but fall and the soon winter season usually exacerbate that for me. But all this to say, no matter how we prefer to compartmentalize our time, it continues to pass at an ever so increasing speed. At least it feels like it for me. Time at the age of 26 passes much more quickly than it did when I was 21, 22, or even just last year at 25. So I'd imagine a 30-year-old Jesse, then hopefully a 40-year-old Jesse, would say the same thing. With this all being said, I really hope you guys are all doing well, having had made it through about 3/4 of the way through the year already. Home stretch from here, right? We can do it. And on another note, I must say, it does excite me to see a few more subscribers each week, joining this journey, joining this storyline. And do pardon me though, as I hope it to be a long one, so be patient, and technically we have a lot of time. I'm hoping that soon enough I'll figure out some ways to just better connect with you all. I have some ideas, but we'll keep them in the works until they come to surface. But I guess I should share. I did recently hear the community tab for a channel on YouTube should open up now for those with 500 subs. Now that's pretty neat, because guess who has 500 subs? But before we get into the journey of Mr. Earl, how about taking this brief reminder to like the video and hit the subscribe button if you haven't yet already, and only for those who haven't yet already, because well, if you hit it again, you'll technically unsub, and although you're totally free to do so, don't make me bring up a picture of a non-happy happy tree. Only happy little trees here. So when it comes to obtaining financial success, I'm sure we all have our own interpretations of what this may look like. After all, there are so many ways to play this game of life. However, there is always something special about seeing those accomplish what we may not initially believe as possible. The financial journey of Mr. Earl holds an inspiring story, which is a rather nice example of this. Earl Crawley grew up with a condition called dyslexia, and if you're not familiar with the term, in short, it likely meant Earl grew up with a difficulty to learning new words, and a difficulty in reading altogether, which makes completing or advancing in school very challenging. You'd imagine with an obstacle such as this, it'd be hard and quite discouraging to really build up an education level high enough for a career in which required an advanced degree, and with that, a higher salary. However, despite the barrier, Mr. Earl made it work for him, with a long working career, primarily working as a parking lot attendant. With this, you'd think Mr. Earl was stuck, right? Stuck working a minimum wage job, and financially barely making it through in life. But not Mr. Earl. The story goes that Earl actually worked in a parking lot, which was surrounded by multiple high-end jobs and high-profile businessmen. It's reported that Earl would pick the brain of these businessmen anytime he'd get the chance, learning from them what he believed to be the keys to wealth, realizing and picking up the importance of investing in money management. Now, Just imagine, how could a man making $12 an hour, and it said no more than $20,000 a year, make it to a retirement portfolio of $500,000 and a paid-off home? Well, Mr. Earl did it slowly. It took him working in the workforce for 44 years, living frugally, consistently, and guess what? Yeah, you guessed it. A big part of his investing strategy was primarily investing into boring, blue-chip companies, which paid a dividend. And guess the last key bit. He let it drip. He didn't just allow time to tick. You see, he utilized time to compound his investments. Now, what does a minimum wage have up against 44 years worth of compounding and smart money management and consistency? That's a sweet recipe. And one could argue a few cases in this story, such as, well, how much actually was $12 an hour back in Earl's prime? Or Jesse, a portfolio of $500,000 is nice, but it won't even allow me to survive with a family of 4 today. And those may be some good points, but just as Ronald Reed in my first story, and Mr. Earl here, what they both teach us is the recipe. It's up to us to add our own ingredients. Mr. Earl also utilized time as a key component to his investing strategy. And given a set of cards we'd normally use as a lifelong tool of frustration, Mr. Earl pushed forward. He lived below his means, used the critical component of time, and invested in a very strategic way, an unexciting way, a safer way. These are foundational pillars. And say you want more than a $500,000 portfolio, or you want to work less than 44 years in the workforce. Well, this is where the steps to fast track this process come into play. And that part, well, it's up to us. This is where knowing the recipe, we then try to find ways to increase our income, find ways to invest more, drive a 2001 Toyota Camry until the wheels fall off. Okay, the last one I just threw in there, but the point remains the same. You gotta live below your means, likely even more than you need to, maybe even for a bit more than you have to. Ronald Reed and Mr. Earl are just 2 examples that it could be done on a smaller income and in a most conservative strategy. But time, and time. That's really all I can say. Use it methodically. Don't just let it tick. And now, as we wrap up this week's video, let's go into the portfolio review for the week, where we continue to make progress, despite the oddness of the markets. But the good thing, as we're investing for dividends, we can ride out these swings. So here we are in the Jesse's cash flow portfolio, currently sitting at $37,357.72. It's becoming a little bit more of a mouthful as we go along, but that's a good thing. That means more numbers, and more numbers means a bigger portfolio. But this is on the all-time charts if you're curious. And on the all-time charts, our current all-time return is 29.52%, and our gain for the entire portfolio, including dividend payouts, all summed up together, is $4,721.96. And as you can see here from market gain alone, we're still above the $4,000 mark, which is pretty neat, at $4,012.95. And our earned dividends calculator here, it keeps getting bigger. We're at $709.01. And a cool thing that M1 Finance has here, just to show you, I was actually looking at it earlier, is if we click on view here, but we could also see based on our sectors, our actual dividend payout per sector. Most of our dividend payouts are from the ETF, which I believe is a high dividend yield ETF that I'm holding. So it's no surprise at $123.26, and then followed by the REITs that I do hold. So the real estate sector. Tech is at $24 in dividend payouts so far, third from the bottom. And just because we actually had this portfolio over a year now, if you're new, as a reminder, I did start it on July 20th of the year 2020. But because it's been over a year, how about we click on the 1 year return mark, which is currently at 23.06%, about 6% off. And just to take a look at the last week's performance, we were actually in the green, surprisingly. And the markets have not been very thankful recently. but I'll take the green when I can. So we're at 0.95% return, which equates to a total gain of $352.49. And it says earned dividends from this past week is $29.85. And out of curiosity, just to click on the view, a lot of it is actually from communications, and then financials, industrials, and a little bit of tech. And as we get closer to wrapping up this week's video, here we are in the dividend activity section. We started off the week on October 4th with 6 buys. And this is pretty much from a snowball that likely accumulated over last week that didn't go into the portfolio of $26.65. Here we are on October 6th with our $500 deposit, just like we always do, and our funnel. But our funnel this time didn't include the snowball. That happened separately. But let's just say it was about a $26 snowball this week, which I'll gladly take. And our one dividend payout for this week was Chubb at $3.16. So that's going to be it for this week's video. Hopefully you were able to enjoy another dividend story. It's my second one in that series, and they're pretty fun to make. Ronald Reed, Mr. Earl, they're just 2 examples of individuals who had a recipe. They added their own personal ingredients, the ones that they had available to them. As for us, we can recognize the recipe. Let's add our own ingredients. We don't have to wait 44 years in the workforce to retire. If we don't want to, we ultimately may have to, sure. But if we give it a good attempt to try to fast track that process, try to increase our income, invest more, make some more frugal sacrifices, we may be able to do it sooner. A lot of what this channel tries to point out is just the importance of time when it comes to that recipe. I think time is very important. And in speaking of time, we've made it through 7 days. We can make it through another 7 days. And I'll see you then. As always, take care.